Good afternoon, traders and investors. Will back here with another one, coming to you with a Monday market recap. Hope all of you had a very good day of trading today and a very beautiful weekend as well. And in today's markets, guys, well, it was slightly challenging depending on which industries you were invested in. The market once again struggling from a lack of breadth and was a very top-heavy market today. Mostly all the gains coming once again from big tech, and this time a nice little change from semiconductors. Of course, the news from semiconductors was they all popped because of results from Foxconn. Foxconn, one of the larger semiconductor / electronics plays that we don't often talk about on the channel because they do not have any US-based tickers. However, the revenue was staggering, up a 15% year over year, and saying that the demand for AI, more specifically enterprise AI, such as data center applications, is absolutely through the roof. So obviously that sent a lot of the US and European counterparts into turbocharged action, and they did have a very beautiful day. However, the challenge remains for the rest of the market, guys. QQQ was good, SMH was good, but the bottom half of the market still lacking a little bit of that participation to say that the bulls are fully back into swing in a broad market fashion. So in today's markets and today's video, guys, we're going to cover a few key things together. Number one, we're going to do a quick little recap of exactly what happened today, go through that article a little bit and see what the main bullet points are. Number two, we're going to be taking a look at our technical analysis in terms of our major stock market analysis rundown. All of the major sectors that you see here, I'll do some quick TA on. We'll see how they stand after today's nice little bounce. And then, of course, take a look at our big tech names and see how those stand as well, and whether or not I deem there to be some nice buying opportunities across the big tech names as well. I've been saying now, guys, for about a month and a half that big tech is probably going to be the easiest trade of 2025, and I do still think that is the case. They are simply the sector, guys, that do not stand to be affected that much by any political decisions that possibly the new incoming Trump administration is going to make, by any inflation problems either, because we know that big tech was the favored trade while inflation was still relatively high in 2023 and 2024. And they also don't really care about interest rates because of the fact that they have so much cash on hand. And also, while interest rates were high and inflation was high, 23 and 2024, big tech was the outperformer trade. So if we embark into 2025 thinking that we may have the same old things issuing some caution, namely inflation being higher for longer, stickier around the 3%, 2.5% mark, and rates higher for longer, we just got to go back to the basics. Which trade performed the best in that similar environment? And it was indeed big tech all throughout 23 and 2024 as well. So we once again will be faced with an opportunity to ride big tech to the absolute sky, while the rest of the market has to deal with many different things: pricing power, inflation, high yields, right? All of that affecting the value sector, to say the least, as of recently. So now before we get into more technicals here, guys, let's do a quick little rundown. So SPY up about 0.58%, QQQ up about 1.15%. Not all that bad of a day, but you can see once again where the problem lies. It's the bottom half of the market. They're just not doing anything. It's big tech versus everything else right now. And until we see some peaking out in the longer term rate yields, such as the 10 and 20 year, I do not think that value is going to be the place to be. They are currently battling with yields right now. The yields are risk-free. They're paying like almost 5% for 10 and 20 year bonds. So why would you buy some value and defensive names which do not grow that much? They may pay nice 3, 4, 5% dividends, but the stock price is always at risk of going down. You compare that with a 10 or 20 year risk-free yield, or even some high yield savings accounts with your banks that provide 4, 4.5, 4.8% per year. Those are far better opportunity costs than possibly getting into some defensive stocks that are struggling with pricing power, battling against high yields as well, and possibly battling with this resurgence of inflation, which is why I say big tech may just be the favored trade. It has been the favorite trade for the past month of trading. You can see the rest of the market over the last 1 month. Big tech has largely been some of the outperformers. It's been the case arguably over the past week, even though we have seen some declines from record highs in Apple and Tesla. They're still up very nicely. And once again today, into 2025, we see the exact same thing coming to light. So take a look at the one-day relative, guys. You will see that even better, communication services and technology. Communication services is largely only Google and Meta at this point, guys. Those were up. Everything else pretty much struggling to maintain gains or even slightly to the downside, such as defensives, utilities, and real estates, which are all highly volatile in the face of rising yields. So that being said, guys, that is the review of the heat map. Let us dive into some of this article right here. NVIDIA chip stocks pop after Foxconn reports record revenue. Now, what's funny about Foxconn on the day, they were only up about 2.64%. 4%. But when we take a look at my options list here, you can see Micron up 10, SMCI up 10, ASML finally up 7.6, TSM up 5.5. Everybody going up more off of Foxconn's own news than Foxconn itself. So quite a funny, quite a funny little paradox happening right there for Foxconn. But let's get into it essentially, right? So they reported revenue of just approximately $63.9 billion, which was fantastic, up 15% year over year. That is very fantastic, guys. Foxconn's bumper sales performance was heavily driven by growth in cloud and networking products, which includes AI servers like those designed by the likes of chipmaker NVIDIA. Shares of several semiconductor firms across Asia, Europe, and the US rose on Monday, with the world's largest chipmaker, TSMC, hitting a record high. All that complemented with the fact that last earnings cycle, guys, you had big tech saying that they were going to spend a lot more money in 2025 on data centers and the ramp up in AI technologies as a whole. And we just got news from that. You did not hear from me on Friday because there was no video on Friday, but late last week in the Friday session, this is what Microsoft had to say as well. Boosting chip stocks more generally is Microsoft's announcement at the end of last week, plans to invest $80 billion in 2025 on data centers that can handle AI workloads. Not only them, guys, wait until we hear the Q4 earnings from all our big tech companies coming out in 3 weeks' time. Google, Facebook, Apple, potentially all candidates, Amazon as well. All candidates which will be increasing their spend on data centers and as a byproduct on the semiconductor industry as a whole. So I think we're going to get phase 2 growth of semiconductors. I've been waiting for it for a while now, and now it finally seems as though people are turning the page and recognizing what I've been saying for the last 3 months, which is that semiconductors are probably going to be a favored trade into 2025 as big tech and other companies alike, such as Oracle, continue spending boatloads of money on the infrastructure build out. So that being said, guys, let's jump into some technical analysis for now, shall we? Now, in terms of SPY, taking a look right now at the SPY, up about 0.58%, but you can see, guys, no major levels have really changed, right? After losing the daily uptrend into Powell, we now find ourselves in somewhat of an accumulation tightening range. We are trapped between two levels, trapped between overhead resistance, which is 600 down to about 595, and below support, which is 585 down to about 577. Now, keep in mind, we do have a number of volatility catalysts throughout this week, and it all starts tomorrow with the ISM Services PMI, guys. This is all live. I'm not going to edit any of this stuff out, right? And the JOLTS jobs openings, followed up by another jobs report on the Wednesday session, and wrapping it all up, the big jobs report, which is the non-farm payrolls on the Friday session. So the volatility for the week can start as of tomorrow. Pay special attention to how these jobs reports come out. As I've said many, many times before, guys, this year, it's all going to be about 2 economic releases. Only 2. If you have to follow only 2, watch these, guys. It's all going to be about inflation. So watch the CPI numbers and watch every single jobs report that comes out every single month. Those are going to be the 2 things that will erode the status of the economy and erode any bullish sentiment that the markets can have into 2025. Those are the 2 catalysts to be watching out for. So when you have a week loaded with jobs data and you know the market is paying special attention to them, what do you think is going to happen in the event that some of these jobs reports miss their mark to the downside? Well, obviously the market's not going to like it, and it can bring SPY down further back into the level that we just came out of right now. So as of right now, no clear trend. The bulls are trying desperately to reset this into a daily uptrend, which would bring an end to our weekly consolidation phase of the last 3 weeks of trading. But we're not out of the woods, guys. We have not confirmed the uptrend, so any lackluster jobs data is going to bring these markets right back down to where they started. And if we do not get some more broad-based market performance, especially from value, take a look at value. Here's value, right? IVE. As you can see, guys, no value to be had, arguably, since the end of the month of November. We need the other sectors to be participating, namely financials, which has been weak since that same period of time, and healthcare as well, which has been weak since far before that, since September. Tech cannot keep doing it on its own. If you want to see new all-time highs on the SPY and really start pushing through the levels, we're going to need the cooperation of the entire rest of the market. Big tech can only do so much in lifting up the SPY. They can do it for a while. Semiconductors can definitely help, guys, but you guys all know we need the participation of the rest of the market if you want to continue to gain the levels on the SPY in a significant and consistent and healthy fashion, to say the least. Taking a look at some of the indicators that go along with the SPY, you will see that percentage of stocks above their 20-day moving average is now sitting at a cool 40%. So we are off the lows of the low 20s. And I was saying back here, it was a decent buying opportunity. When you line up low market breadth, with a fear and greed index indicator here at fear, market momentum was fearful over the last 2 weeks. Stock price strength is also at extreme fear levels, net new 52-week highs and lows, which stands to argue, guys, when all the stocks are hitting below their 20 EMAs, it stands to argue that you're hitting a lot more lows than highs, right? So that indicator makes sense. And stock price breadth, which is also what's measured by this index, all of which are in fear zone territory. So I was saying that you can have some decent dip buying opportunities or some opportunities to run the wheel, but we are not out of the woods yet, guys. Not until we start tapering or until we start gaining back on these longer term EMAs as well. Here's your percentage of stocks above the 50-day EMA. You can see we're still weak at about 37%. It can go lower, guys, but we are coming into the dip buying territory where every single time we come down into the slower area usually does represent a decent buying opportunity for your favorite high quality, high conviction stocks, right? Don't have you guys buying garbage out there. And percentage of stocks above their 200-day moving average still remains about 52%, which is arguably some of the lows that we'd had in the entire past year of trading. Obviously, it can get lower when market conditions are really poor, like in 2023, where we had the resurgence of inflation fears. It can go lower, but all in all, the short terms are pointing to the fact that down here is a buying opportunity. The medium range moving average is also pointing to that effect. And the longer term moving averages as well, although they can move lower. This is where we need to start identifying opportunities to buy the dip. So that is the analysis on SPY right now. The weekly bulls are still well in control of this chart, looking not too bad. The weekly higher lows are down here at about 565. So a lot of room to wiggle with right now. The one thing you do not want to see is lose 581. That would be a weekly downtrend and could just bring us to more volatility for the month of January. And you guys know January, seasonally wise, is a very bumpy ride. Early January, you can come into the January effect where you get a little bit of rally into the markets, but look what happens end of January. And funny enough, this month of January, we also have a bunch of catalysts at the end of the month. Donald Trump inauguration, January 20th, and then the first week, we will hit a barrage of policies from that administration, right? How the market will react to it, anybody's guess. That following week thereafter, what do we also get, guys? All of your big tech earnings, banking earnings starting late next week, but the week of January 20th to the end of the month, that is all big tech earnings. That's going to be another huge volatility catalyst. And what do we get at the end, January 29th? Well, of course, Jerome Powell coming out. And a lot of the consensus right now is for a Federal Reserve pause on interest rate cutting. So we will once again see how the market reacts to that. Goes right in line with this seasonality chart where early on in the month, we don't have that many volatility catalysts. But as you start adding volatility catalysts and uncertainty, right, this could lead us into some negative seasonality towards the end of the month of January. So please keep that in mind when you're looking at this analysis. That would make the chart look something like this through the month of January for some possible January monthly consolidation before maybe embarking on a nice end of February, early March rally. So all I have to say, guys, is, do not blow all the cash right away. Do not get overly bullish before the catalysts are through, and just don't overcommit to the upside. Be patient. Let the market come to you. It's okay to be bullish. I am still bullish as well. I like to refer to myself as cautiously optimistic, but am I spending all my cash here close to the all-time highs after 3 days of bounce? No, but will I be buying some fear dips if we come down into oversold conditions? Everybody starts panicking. This head and shoulders starts actually playing out, and we go for a little bit of a dip down here. I will be buying those dips, but we need to be a little bit patient and a little bit cautious with these markets with all of these volatility events coming in at the end of the month. Now, moving into the QQQs, give me a very brief moment because that was a mouthful. And there we go. So the QQQs up about 1.15%, but still, guys, in the context of a daily downtrend. We will see if it's the lower high. The lower time frames are not looking too bad. Hourly, looking for the hourly trend expansion. But if you lose this hourly uptrend into tomorrow, go for the gap fill from today, an hourly downtrend. That is going to be your daily local high. And then we set the local high. It's up to the bulls to set up for a daily higher low to get a daily uptrend back. Because as of right now, it is still indeed a daily downtrend for continuation. Support below us, 515 down to about 510. On the weekly, not looking the worst. Weekly support levels are down here, 485. But take a look, guys, right? If you put in a lower high this week and then dip lower than last week, that would be your first confirmed weekly downtrend in a very long time, since the month of March, last March, as a matter of fact. And that would send us into a little bit of monthly consolidation to wrap up the month of January, early February, and that is when you might find your monthly higher lows, and then go for a continuation of the rally into later, well, February, March, April, May of 2025, of course, right? So we need to have, I'm not saying that's going to happen, but if it does happen, do not be surprised. Be ready. I would love to see the markets just continue in a straight line up from here just as much as you guys would. But as I've been saying for the last 2-3 weeks, guys, we're in a mindset right now, especially through only January. We are hoping for the best case scenario, but we are expecting the worst case scenario, and we are prepared for it. We have a shopping list, and we know what to do in the event the markets come back down there. Now, moving into financials right now, financials still weak, 0.31% to the downside. Financials also struggling to set the daily uptrend, not breaking 49.02. They're trying for the daily uptrend. They could not get it done. In the event the bulls roll this over and head lower and break this level right here, 48, we are coming once again into another daily downtrend. We are going into weekly leg down number 2, and you can see the size of this bounce on financials so far has not been impressive. I would arguably say they literally have this week to get their act together, because next week it's earnings, and Lord forbid that any of them have bad earnings and the sentiment is bad. We are going to have the flush on financials all the way back down here. First level of support, 47.60 all the way down to 47. The bigger level though is 46 down to about 45. This area down here, roughly in line with the 26 EMA, which you can see we have not lost since 2023. Now that's going to be the big one, so we'll keep an eye on this. As of right now, the bulls holding their ground, but like I said, they need to get their butts in gear, guys. This week, create some space. That way, if earnings are bad, we have a fallback area to a closer support level. The last thing you want is bank earnings to come into here with their earnings on the horizon, and then their earnings are poor. Then they go for the gap fill down here from the November rally from Donald Trump election, of course. And then we're retesting these support levels down here, and boom, you've just went into 2 months of monthly consolidation for financials. Moving into healthcare. Healthcare, also extremely weak bounce. The bulls are trying to go for the daily uptrend, but still no confirmed close above 139.72. So we'll keep this one on the back burner for now. The sector is still incredibly weak. I would not be surprised if we do get the rollover. But like I said, the bulls need to get their butts in gear on these other minor sectors. Well, they're actually major sectors because they represent the largest weights after technology. Financials and healthcare are the 2 largest weighted sectors in the entire market. So we need them to participate if you want to see some more SPY upside. As of recently, we have not had financials participation since the later part of the month of November. So it's been over a month at this point. And healthcare, we've not had those guys since the fall. So we need one of these two to at least come back and support the bulls in their quest for new all-time highs on the SPY. Until that happens, I do remain slightly bearish on healthcare because of Trump and his pending policies that we're not too sure what he's going to do with healthcare, not too sure what Robert Kennedy is going to do with transparency for pharmaceutical companies and XYZ other factors like that. So I do still think the sector remains plagued by some uncertainty. That being said, we're going to be looking for some monthly support, 140 down to about 128. I know it's a very wide range, but this is the range where you expect the bulls to react from the most. In the event we come down a little bit more, it's going to be really starting to challenge the higher end of this resistance. The sector still remains out of favor until they prove it to me, guys. Until we get a daily uptrend, that's step number 1. So far, where's the last daily uptrend? Here, and it didn't last for very long, did it, right? We need a daily uptrend. Then when we get the daily uptrend, I will measure the size of the bounce on the weekly in relation to the lower high right here and see if we can get a weekly uptrend going, which would be the end to your monthly consolidation. Takes a very long time to turn around a monthly chart. I will tell you that, to say the least. Now, moving into semiconductors, finally, a pop. But can they hold the pop, guys? We did not close above today. 260, right? 260 was the level to hold. We're barely above that right now, but you guys get the drill, right? Daily uptrend, yes, clear as day, but we are still in this overall area of resistance, which ends at 260. If we get more follow through tomorrow, perfect, they'll clear it, create even more space above 241, going for the daily higher low for possible further trend change. That is the best case scenario. That would be a breakout, retest of the level, and maybe run. This retest area, high probability for a swing trade going above, so not looking too bad. However, if we get rejected, good thing we have a lot of space, anything above 241, looking for a daily higher low for possible continuation, and then we might get the breakout retest, right? So it's either almost here or they need a little bit more juice, a little bit more momentum down there, and then before popping above. That being said, on the weekly, guys, I will not close this weekly resistance box green until we close a weekly candle above 260. Too many times have we been faked out by this zone so far. We will not be faked out anymore. Even though the weekly timeframes are looking good, we need to get the candle close above, need to do the breakout, retest this area, prove to us that the bulls want to defend this now as support, and then we can go for the expansion trade into 2025. I myself have been positioning in a few semiconductor companies for this potential break, so it's nice to see that it's finally here. But one day, guys, is not enough for me to say the bulls have it in the bag. All the possible factors are looking good. Weekly uptrend looking great. Daily uptrend confirmed with a big gap up above, looking great. Weekly MACD, look at this MACD cross, guys. This is literally 6 months of bearish momentum, finally potentially crossing to the upside right now. But all those factors combined, guys, I'm not going to close this box green. I'm not going to declare victory for the bulls because they still have a decent amount of proving it to do for us. Moving into the IWM right now, IWM also not looking too bad, 0.04% to the upside. Daily uptrend attempt by the bulls, but still incredibly weak. This chart looks exactly like a few things. It looks exactly like the value chart. It looks exactly like the Dow Jones. Why? Well, simply because the IWM roughly has the exact same sector weightings. I'll bring this up again. Sector weightings. Take a look at this. Financials, 17, industrial, 17, healthcare, 16.5, technology, 14.7. So there you go, guys. All the major sectors that have currently been struggling in the markets, financials, healthcare, industrials, and defensives, right? Those have been struggling, and so the Russell is struggling as well. That being said, overhead resistance stays put, 231 down about 225. Daily uptrend is not yet confirmed. Need a close above 226. We did not get that. If the bulls lose a little bit more ground and we head towards the lows, I think we'll be trapped between two zones. Where? Trapped between overhead resistance and trapped below, below support, right? 217 down to about 210. This would be an area where I would consider taking this trade again if we get leg number 2 down in value. It's definitely looking like that, isn't it, right? Very weak bounce. Possibly the rollover into further monthly consolidation on value. They can afford it on the monthly time frames. I know you guys don't want to see it. There's a lot of room for all of these to pull back a lot more on the monthly time frames. Financials can do it. Healthcare can do it a little bit more as well. So there's no need for them to push up right now, especially not with yields to where they are. It just puts too much pressure on the value stocks. They don't have enough pricing power, and obviously the opportunity cost of being in a risk-free trade that pays 4.5% or investing in a utility company or an industrial company that pays a 3% dividend, but you're not certain about the direction of the economy. Most people just choose to invest in a high yield savings account, right? There's no growth there in value. That's why people are just avoiding it right now. Very unfortunate, but that's how it is. So IWM Russell, big supply zone, guys. I will be playing this one down here, 217 down to 206, but still a little bit too weak for my liking right now. No confirmation of the daily uptrend. And even if we get it, guys, so much work to get done on the weekly before we can say the bulls have recaptured control of that time frame too. And lastly, now the Dow Jones sitting down about 0.06%. Same concept, right? This one looks exactly like the value index, even though they're not comprised of the same names, even though the IVE has way more stocks in it than the Dow Jones does, right? This one has 402 names. It just goes to show you how weak the market breadth is when an ETF that has 402 valued names looks exactly like the Dow Jones that only has the top 30 names in the market, with some technology names in there as well, such as NVIDIA, such as Microsoft, such as Amazon, right? So it's not as if it doesn't have some power players in there, but because of how the Dow Jones is measured, I've reminded you guys of this one a lot, right? Dow Jones 30 names. The Dow Jones is not a market cap weighted index, guys. It's not weighted by the companies who have the largest market cap like the S&P. The Dow Jones is a price weighted index with a multiplier, which means that you add the share prices of all these companies together, right? So like 227 plus 301, you add what they call the Dow Jones multiplier. It's a multiplication factor, and you end up with the actual price of the Dow Jones. That's how it works. The weighting, which company is the highest weight in the index, is the company, of course, with the highest price. In this case, a bunch of value names, right? Goldman Sachs, United Health, Microsoft is in there though, Home Depot, Caterpillar, Sherwin-Williams, Salesforce, Visa been doing well, American Express, McDonald's, but a lot of the other companies, guys, are just kind of nowhere to be seen. So a lot of these value names just not performing the best at all. A lot of the banking sector names, United Healthcare has come down a lot, of course, over the last couple of weeks, right? So that being the case, Dow Jones still remains a little bit weak. I still like the sector, but it has been weak. Just got to call a spade, right? So daily downtrend possibly still underway. The bulls are trying to go for the daily trend change. That would be a break above 43,337. I'm not going to give it to them until we get that daily uptrend break. And then only then we can measure the size of the weekly bounce, because at this point, a V shape seems somewhat unlikely. If they do get the bounce into a new uptrend, probably going to have to two-step this process, right? So we'll keep an eye on it, but as of right now, the bull's not in control, and the last thing you want to see is losing 42,000. That would just be perpetuation of a new daily downtrend into leg number 2 of weekly selling. This would be a first weekly downtrend on the Dow Jones since a very long time, guys, since fall of 2023. So you cannot lose on the weekly 42,221. If you do that, it is a weekly confirmed downtrend. You have not had one of those in about a year and a half's time at this point in time. And if we do get the weekly downtrend, you know what's happening, guys. It is monthly consolidation. And what better month to do it in than the month of January, when the bulls have so much space. Anything above 37.5, 37.6 is looking for a monthly higher low for possible further trend continuation into 2025. But look, you know, this was December. If January also is red, that will be 2 months of pullback. Dow Jones sometimes has 2 months of pullback in the context of monthly bull swings, pullback, and then rally, right? So can we see a little bit more pain in value? Yes, absolutely. So keep try to do your best, guys, to be somewhat conservative in the month of January. It's okay to build a shopping list, but if you're buying the dips, if you're DCAing, DCA slow, because more often than not, you guys know it best, right? You run out of money faster than you run out of price levels to the downside for the market, right? So just keep that in mind. So that's everything pretty much for your index rundown. Hopefully that was insightful. Now let's take a look at crypto. Crypto also having a very good weekend as a whole, guys. Beautiful rally by the bulls right there. Not looking too bad at all. And in the grand scheme of things, this is pretty much a very nice new leg higher. We're going to eventually need to set the daily higher lows. Have not been set just yet. So the bulls looking very good. They had the daily downtrend going for the bears right there. That we know. Now we have an engulfing move by the bulls above our area of resistance, which is pretty much 101 down about 98. We are now back above that. You would like to see a breakout, retest, set the daily higher lows, and run a little bit further. Not looking too bad for Bitcoin as a whole. What has this established on the weekly timeframes? Well, the weeklies were never in jeopardy at all. If anything, I was always saying the last 2-3 weeks of consolidation, we are looking for a weekly higher low, and I would not be surprised if the area we're looking for it in is 91 down at 88, which is also confluence with the 12 EMA. And that's exactly pretty much what happened. We found a local bottom there, and now possibly looking for another leg higher. Another leg higher, of course, would be a break of the all-time highs. Even if we get trapped in a tightening range, similar to what we did back here, guys, it would not be the worst case scenario for Bitcoin as a whole. But as of right now, Bitcoin is looking very strong. Monthly timeframes also looking quite strong to start the month of January, but the month of January has just begun, right? This candle can very easily turn into what we had last December, a nice big push up, and then end in somewhat of a doji and just perpetuate this tightening range for a little bit more time than people are anticipating. I love Bitcoin for 2025, but just do not get too greedy, guys. You should be buying Bitcoin down here when you're nervous about the absolute flush, right? Not up here when you're like, oh, okay, it's safe now, and then they pull back on you right away, right? Buy low, sell high, not the opposite. I know it's easy. I know everybody wants to buy on green because then you just have the momentum and the confirmation, right? But you got to get used to buying things when nobody wants them. Moving into Ethereum. Ethereum also down, or it was up today, as a matter of fact. 1.46% was up over the weekend as well. Very nice daily push by the bulls, right? Daily uptrend is now in motion. Anything above pretty much 3,300 is just looking for a daily higher low for possible further leg higher, right? Possibly coming down 3,500, which is prior resistance right here. Newfound support, and all the short-term moving averages are sitting in that pocket too. 35 to 400. Of course, we have overhead resistance here of 39 down to about 38, which is very logical, right? It's been the past 52-week high resistance for, 1, 2, 3 times as a whole. The weekly bulls are still looking very, very, very strong. Even if we dive into some sort of a tightening range, it would not be the worst case scenario for Ethereum. I'm still very bullish on Ethereum as a whole as the year progresses, and as we might get favorable policy from the Trump administration. Altcoins still on the fence. You need to see the loss of the weekly time frame on the weekly dominance chart. This is Bitcoin dominance. If you guys don't know what it is, of course, it is simply the percentage of market cap that Bitcoin has in relation to all of crypto. So you add all the coins together. How much market cap is all of crypto? This is how much Bitcoin represents of that market cap. Similar to how much of the S&P does Apple have in it, right? Same concept. This is Bitcoin. Bitcoin has 57%. It's been a 2.5-year uptrend. We want to see the weekly downtrend manifest to give the altcoin bulls the best chance. When the dominance chart falls, the altcoins usually start outperforming Bitcoin. It does not mean that Bitcoin has to go down. Bitcoin can still stay flat or even go up, provided that the rest of altcoins push up higher. We need to see the weekly downtrend confirmation, guys. Break of 55%. That is going to be your first weekly downtrend confirmation. As of right now, it was a nice attempt, but you need to get the confirmation to really confirm that we might be on the verge of a very big altcoin rally, which is why I'm positioning in altcoins right now, but very small, buying the dip, averaging in. We had a very nice dip opportunity on altcoins. They ran a ton after Trump's election, pulled back 50, 60, 70% of all their gains. And now is where I'm going to start accumulating because I do think we are going to get an altcoin rally. It's just a little bit tough to pinpoint the exact timing of it. So this is when I'm starting to buy and just nibbling at them, guys, nibbling. Because you guys know crypto can go down 10% in a day and nobody even blinks an eye. Now let's move into our big tech names, shall we? Give me a very brief moment. And let's get into it. So Apple up about 0.67% today. Not the worst day for Apple, but then again, we also know the context was a loss of the daily uptrend that they had for a very long time. Lost it by flushing these lows right here. We might just be expecting a lower high into lower low scenario, guys. This is a pretty big drop. We'll see what the bulls, how the bulls can respond to it, right? But if you want to see the bulls get this back, the V-shape is somewhat unlikely, guys, unless the markets are truly just start ramping to the moon through the month of January, which is a possibility, but it's the unlikely scenario. It is always a scenario, guys. You know, nothing is ever impossible, but probable is the lower high, and then it's up to the bulls to prove to us, can they get the daily trend change? Of course, it all relies in the size of the bounce. The higher you bounce, the better the odds of getting that trend change. But as of right now, guys, I wouldn't be surprised if they do still just set the daily downtrend into further weekly consolidation. 1 week of consolidation was good, but Apple was straight up and to the right for about 7-8 weeks worth of time. If we do pull back a little bit more, nothing but a healthy retest, guys, retesting the previous all-time highs at around 236 down to 232, breakout, retest, and possibly run. This area right here could free up some trades, and I'll let you guys know if I'm taking those trades. As of right now, not adding to any of my long-term Apple shares. Valuation right now is a little bit rich at 250 at about 3.5 peg, 3.4. So I'm not adding any, but I'm also not selling any shares either. And for a swing trade, I'll be patient, wait for the 240, 230 zone myself. Moving on to AMD right now. So AMD, of course, responding well to a few things. Number one was, of course, the semiconductor bullishness in the markets today. And number two, they didn't even respond to their own event. So if you guys didn't know, AMD was actually speaking at CES today. They had a conference where they revealed a ton of new things. A very, very solid CPU for gaming purposes, well above what Intel is delivering. They also did they had the new AI PCs, a partnership with Dell, of course, gaming chips, etc., but not enough to actually prop up the stock. The stock actually rose more in the pre-market from the Foxconn news than it did throughout their own event at CES. I was very pleased with the results that AMD was promising for 2025 in terms of the new products that they had, both for the consumer and enterprise alike. But, the stock market just not responding to it the same way that it does maybe for an NVIDIA release, so to speak, right? AMD is still number 2 behind NVIDIA for data centers. Let's not forget, NVIDIA has 85-90% of the market share, and the other market share is divided between Broadcom, which is a new player right now, AMD, and of course, there are a few other smaller companies doing the exact same things, right? But those are the main players: AMD, AVGO, and NVIDIA for the most part, right? You got a little bit of other ones here and there, but those pretty much are the largest winners. So that being said, right, AMD performing well today, up about 3.33%. Now they've done something that they have not done in a very long time, guys. What did they do today? Well, thank you very much for asking. They set up the daily uptrend shift. So now we finally have the daily uptrend. So as soon as this move tops out, looking for a higher low, anything above 119.61, looking for a daily higher low for continued push into the higher levels. What are we looking to do now that we have the daily uptrend, guys? Very quite simply, we're looking to get a weekly bounce, a very solid weekly bounce, and challenge this guy right here. Weekly downtrend. Now, what we need to do, create enough space off these lows on the weekly time frame, which means we need the daily to continue moving higher, right? So we're looking for a at least 618 bounce on the weekly, which would be 135. If we can get at least a bounce into the 135 zone, it's going to look good for the bulls to eventually be able to either take back more of the move if they want to, but if they at least get a 618, it sets themselves up nicely for a possible recapture of the weekly uptrend. Same concept has happened right here, guys. Take a look at this bounce, right? This bounce was literally a 618 bounce, and you can see they set the higher lows and they went for the trend change, right? So that's exactly the same concept what we need to see right now on AMD, which was why I was buying the dip down here, and I still do like playing this opportunity in the event we drop a little bit lower for the higher lows. That's going to be pretty much last chance to dance if you want to try and make an attempt for this weekly trend change on AMD. Not looking too bad at all. The valuation is extremely cheap. The expectations for the year are very good. They're supposed to be coming into analyst price targets, which are at a midpoint between 150 and 180, let's call it. The EPS ramp is the thesis for the next 3 years because of the data center build out, and revenue ramp is all the same. So they should be coming out this year and next year with some of the best results that the company has ever had, and that is my thesis for buying the stock at these lower levels. We could be wrong, guys, but at this point in time, I think the reward outweighs the risk at the current time. So it has a favorable risk to reward profile, which is why I am in this trade myself personally, writing short puts down here. And I also have a leap contract call on this stock as well. Moving into Amazon. So Amazon performing well today, 1.53% to the upside. Not looking too bad at all, guys. Trying to get the daily uptrend back. We know it's been in a daily downtrend. The bulls have a very juicy bounce right now, almost a 100% engulfing move. So two possible scenarios. Either we get the full engulfing move and you confirm a brand new daily uptrend in the process, or the market fades and we just get trapped in a range of consolidation. Worst case is, of course, you flush the lows and go further and further into a little bit more weekly consolidation. Break at this point would be a weekly downtrend. You would not want that because then we're revisiting 214 down to 205. I would not mind that per se because that would free up some more wheel trades, but Amazon is not looking all that bad, all things considered. It's just, you know, if you're buying here, guys, expecting for the absolute moonshot, you're not getting the best risk to reward, right? The best risk to reward is being patient and waiting for a possible 214 down to 205 dip. They have earnings in about 3 weeks worth of time. I mean, I do have call options, but I have call options from here. So I'm up already, but starting that same trade up here, guys, yeah, it can have a good chance of working. Yeah, Amazon's going to have a very good year, but it's all about risk to reward, guys, right? There is some reward here, but the risk to reward profile is not as favorable as it was when I took the trade here or when we were taking also trades back here or even back here. Don't kid yourself, right? That being said, Amazon, an extremely high quality company. It's in my long-term portfolio forever. 220 of a 1.65 peg, which is not that bad at all. And Amazon is doing something this year that it's never done before, which is focusing on being the most profitable that it has ever been. Positive net income, positive free cash flow, most free cash flow ever, and that should be enough to carry the company to new all-time highs in 2025. Moving on to Google right now, 2.5% to the upside. Not too bad, guys. Daily uptrend reset on Google. Looking pretty good, but still trapped, right? Trapped below this 200 psychological level. We'll see if they can break it this week, but not looking too bad. Daily higher lows are set. So if we do pull back a little bit here, looking for a higher low, anything above 189, looking for that daily higher low for possible another push into the 200s. Google is looking very strong right now, guys. They've never lost the weekly uptrend at all. Weekly higher lows arguably are set right now with the recapture of the daily uptrend. We have our weekly higher lows, and we will be looking to make a push into the new all-time highs. Not looking too bad at all for Google. Suffice to say, guys, if it's not now, when can I ever say it, right? Well, I'll just say it right away. I told you so, and I told you so. Thanks for playing, guys, right? So I was calling this one out on the channel for so long, guys. We got leap call options from the absolute bottom in September. Fantastic trade from us. And we've been playing short puts the entire time with even some Google swing trade calls on the way up as well. It's been a very profitable stock for us, but as of right now, you have to understand if you're buying this one right here, yes, the company is still extremely undervalued at 196, is about a 143 peg, extremely undervalued. The growth prospects are very good, but what is different here than down here? Absolutely nothing. The Department of Justice headline risk still remains. Nothing has changed in the company, both with that headline risk and the fundamentals of the business. Nothing has changed except for the market sentiment around the company. All of this is sentiment shift alone, which goes to prove when you find very solid legacy companies that are in the depths of brand perception and market sentiment, you have to come to a conclusion. You have to figure out, is the market wrong for being, for being overly impatient with Google or being overly critical of Google, right? Is the market wrong? Are you possibly panicking for no reason? Is there a good opportunity here? Is there value here? And the answer was a resounding yes all across the board, which is why we fired off so many trades back here and here. And now we are reaping some very good gains. So, I mean, I'll say it once. This is the only time you'll ever hear me say this, guys. But it was a very solid trade, the likes of which we've done many on the channel so far. We caught one of these high quality, high conviction trades at a negative sentiment with Department of Justice headlines. At the lows here, Visa, easy money trade into the high 290s with some calls. And the other one we caught was not too long ago either. Well, it seems like not too long ago, but it was in April, publicly on the channel. Call options leading into earnings. Apple was down. Same situation. Everybody, what were people saying back then, guys? You must remember, no? Well, if you don't, I have it right here. $2 billion EU lawsuit, Department of Justice lawsuit, 5 out of 6 quarters, flat revenue growth, China's slowdown, Vision Pro's too expensive, lack of phone innovation, Warren Buffett is selling, AI underwhelming, noise. That is all I heard, which is why we bought the dip at 170 on Apple, and we're handsomely rewarded. Now, of course, down here, right? Now, of course, it can take sometimes longer than expected to play out, but usually, if the focus is on high quality companies, that their fundamentals, at least the meat of the fundamentals, has not changed. Only little things here and there, little analyst thoughts and market sentiment has changed. Well, that you can dumb it down to noise. If the company has big fundamental problems like massive loss in EPS, massive erosion of free cash flow, massive erosion of profitability, that is a definite problem. But unless you see those major factor changes, most of all that stuff is just noise, guys, and it is always a buy the dip opportunity. So Google is looking fantastic. Congratulations on all the gains. Moving into Meta right now. Meta up 4.2%. Fantastic showing from Meta today. Looking quite good. Setting up the daily uptrend in a very big fashion, guys. Looking good. As soon as this move is topped out, well, we have a close resistance area, 635. As soon as this move is topped out, we'll be looking for a daily higher low. Anything above 585, looking for a daily higher low. For possible further trend continuation, not looking too bad on Meta at all. On the weekly was never a question. We had a very nice bounce right here, smashing through, looking for the retest level. I was telling you guys, watch for the breakout, the retest of the resistance range, the retest, and possibly the run. So this was one trade. Another trade was being a little bit more patient, waiting for the deeper retest of 560, 550, which would have been a monthly retest of the prior levels. Didn't get that one, but you got the shallow one, which would have been a half size position for me. But all in all, gorgeous weekly trend continuation. Curious to see if they can keep it up. No red flags on Meta's chart to speak of. Moving into Microsoft with their $80 billion of investment, which is why the stock has been somewhat, very volatile as of recently, right? Some people are mixed on it. We know that it's going to be good for Microsoft in the long term, but some people just don't like to see these big tech companies spend a lot of money on capital expenditures when they could be using that money for share buybacks, dividends, et cetera, right? So shareholders having a little bit of push and pull on that sentiment, but that's perfectly fine with me. If they want to invest in their future, and AI will be the future, mark my words, for the next 5 to 10 years, if they want to invest in the future efficiency of the business and, continue to be a dominant player in the space, $80 billion is something that they have to spend. If not, they risk falling behind. So I'd like to see Microsoft doing this. That being said, it is a daily downtrend right now. Got a nice bounce. Take a look at the size of the bounce, guys. The bounce size was fairly good. Bounce size almost 80% bounce. So the bulls have a lot of room to set up for the daily higher lows for a daily trend change. Anything pretty much above 415, we'll just be looking for a daily higher low. And we are barely holding on to this level on the weekly, which is the 435 down to about 421. Let me just expand this so you know what I'm talking about, right? This has been an area that has plagued the bulls quite a few times over the course of this past year. That being said, weekly uptrend is still in the favor of the bulls. We will see, can they protect this and the weekly moving averages, set up some daily local bottoms, get the daily trend change, and finally embark on a new weekly leg higher and finally get above this area of resistance? Well, it's not looking the worst for Microsoft. I agree. This has been somewhat of a challenging trade because it seems as though every time we start breaking above, we just get pulled right back down because of XYZ factor. This does not last forever, guys. When good companies improve their fundamentals and consolidate sideways for a very long time, usually the bias in terms of direction is a break to the upside, especially while improving fundamentals. One of them that did it not too long ago was Costco throughout this whole period back there, and the rest is history, right? I'm not saying that Microsoft is going to have a short-term, super big, fast break like that, But can we break above this level, then continue gaining the levels for a few months? Absolutely, guys. Most of the price targets from analysts are sitting close to about $500, which is also the level that I think it can possibly challenge in 2025. Moving on to Netflix right now. Netflix up about 0.08% today. I was used to saying down because it was red all day before popping up at the end. Daily downtrend on Netflix is clear as day right now. So at this point, we'll be watching for the size of the bounce. Good bounce, you can go for a daily trend change attempt, but a shallow bounce will just be met by some bearish resistance and going for the daily downtrend continuation, guys. All of this just points to weekly consolidation for Netflix, right? They went up a huge metric from earnings, and now we've been pulling back sideways largely for the past 5-6 weeks of trading. Very close to the 12 EMA, which I think is going to be the first level of line of defense for the bulls. That sits around 850, not looking too bad. Looking for the weekly higher low, anything above 750. Looking for that weekly higher low for further trend continuation. No trade for me on Netflix right now, but if we do come down, guys, I want to see a little bit more pain, if I'm going to be quite frank with you. I want to see lower high, lower low. Give me the 850 flush with daily oversold conditions, and that's when I may position right now. But as of right now, there's just not many big support levels to be basing some trades off of. So this one, I leave it on the back burner, but I'm still holding all my long-term shares. I love the company. Moving into NVIDIA right now. Well, NVIDIA, what else is to say than just look at the chart, right? 3.5% to the upside, looking very strong. Did not break the all-time high today at about 153, but came very, very, very close. So we'll see what happens. But one thing the bulls did do is they've created a ton of space right now, guys. Daily uptrend in motion. If we do pull back from here, so much space. Anything above 134, looking for a daily higher low for possible further trend continuation. And if you had to pull back to one location, guys, it definitely has to be all of these guys right here that were acting as resistance the entire time, right? Now they should be acting as support because we did have a clear break above them. So if we pull back into here, let's call it the 145 down to about 142 level. I do think they have a good chance of setting up the daily higher lows and going for the daily trend continuation into new all-time highs. The weekly is also looking quite fantastic on NVIDIA. Nothing bad to say. They have their CES event this week. So if they truly show us some groundbreaking products, which I think they may have a few tricks up their sleeve, at least reiterating demand will be a big one for them. You could actually see the final weekly breakout right now, give us some nice lift, then go for the breakout, retest on the weekly. That would be super juicy for a re-entry for some possible call options or shares or debit spreads, however aggressive or conservative you may be. That is a trade opportunity in itself. I myself am already in this one. I already have my leap calls from back here where we went for the actual daily trend change. I played this one here, going for this move. We got it, happy to say. If I wasn't in the trade and looking for another trade, I'd be patient a little bit, wait for the weekly higher low for further trend continuation just to get some confirmation, right? So NVIDIA looking fantastic, no red flags, fantastic business, and the forward valuation is not even that bad. At 142 is about a 2 peg, which is not all that bad. Moving on to Tesla right now. So Tesla trying to gain back some ground after losing a little bit on the day. They were down top to bottom today, not a very good day. Gap up open into about a 5, almost 6% decline, but recovering a little bit intraday. We know the context for Tesla has been this daily downtrend ever since the end, or rather the day before Powell, right? So daily downtrend underway. The bulls are trying to get together a bounce. We will take a look at the size of the bounce. As of right now, the bounce is decent. I'll give them that. It's about a 50% bounce. You want to see a little bit more, see an engulfing move a little bit more, give the bulls the best chance at resetting into a new daily uptrend. If they do reset the daily uptrend, that means that you have found your weekly lows. This becomes your new weekly higher low, and you're going for weekly trend expansion. Not looking too bad. The bulls reacting exactly where they should have, which is pretty much 410 down to 377. Prior all-time high resistance, now acting as support for the bulls. And I do still think even if Tesla pulls back a little bit more, guys, right? Even if it does continue in a daily downtrend, because that is the expectation right now until the bulls change the trend. If they do continue on this move down here, I will be interested in playing Tesla. If we get a retest down here, 380, 370, daily downtrend continuation, down into these guys, which is prior support, 360, 350, I'll be looking to write some short puts on Tesla below these levels, looking to build a little bit of a position for 2025, possibly looking to rally back into the 400s. I'm not going to get ahead of myself. I have these in my long-term shares. All I'm looking for, guys, is expansion of two things: the monthly time frame with some pullback, the weekly time frame as well. I have some long-term shares as well. These are I'm just talking about the swing trade shares as a whole. Moving into Palantir right now. Palantir down about 5% today, but let's be honest, they have not really lost any major levels, just trading within the same range as of last week, right? So I know they're big swings, but you got to get used to big swings when we talk about Palantir. Big swings to the upside, big swings to the downside as well, right? Keep an eye on this level right here, 73. Break 73 to the downside. That is the first daily downtrend confirmed by Palantir in a very long time. Since back here, as a matter of fact, since the month of October, when they barely said it for a few days, then we had the earnings, right? So keep an eye out. If they do get the daily downtrend, it has to be notable to you. Good thing for them. Right below that level is the level of support, 72 down to 70. This is an area the bulls have been able to hold since the early portion of December. However, if you come down too hard and lose this level, is it the end? Is it over for Palantir? No, probably not. Just looking for some weekly consolidation, looking for a weekly higher low, guys. And if you do come down here to the area 72.70, you could even be rejoining the 12 EMA on the weekly time frame, which has been one that Palantir has often done, right? Breakout, retest, test the 12 EMA, put another leg, sideways consolidation, kind of like here, sideways with a little bit of downside into the 12 EMA, pump again. Could we see this one time again? Pull down a little bit more, give some time for the 12 EMA to catch up and get another little pop into the 80s. Yeah, that is a very likely scenario, and I might be waiting for that one myself. Need a little bit more pain on Palantir for me to get interested, and I'll be probably looking to write some short puts, 65 down to about $60, being a little bit more conservative with it. But that is how I play the momentum on Palantir myself, because as of right now, we definitely cannot play it for the valuation, right? The valuation is definitely far, far, far overblown. And that's from me as a Palantir shareholder, guys. I'm being very, very generous with my valuations on Palantir right now. But all that considered, I mean, it's trading at like a 7.5 peg, guys. That's way too much. It's trading at a 50 price to sales. And that is not the same metrics that NVIDIA was trading at during its meteoric run up. NVIDIA actually had the revenue and EPS growth to back up these numbers. Palantir arguably does not. I'm not saying they won't come into that in the next 5 years, but they do not have it right now. I know as well the market is forward looking and that you have other stocks like, just in this list, right? Amazon was not a profitable company for a very long time, traded very rich for a while, and then eventually the valuation caught up, right? That's just one example that I'm seeing right in front of me right now. There are many others, but you cannot say that Palantir is a value stock right now. You cannot say it's cheap, right? So it is expensive, so because of that, I'm going to play it a little bit more conservatively. And now lastly, SOFI. SOFI up about 3.03%. Decent recovery from last week, but in the context still of this daily downtrend, right? We are looking for the bounce. The size of the bounce is very nice, but it is only that. It is only a bounce in the context of a daily uptrend, right? You guys see what happens when you get a bounce but no follow through. You get a nice bounce, no follow through, doesn't guarantee anything, right? You have to start everything from scratch. So that was the SPY. So if the SPY can do it, SOFI can roll over as well. So keep that in mind. The bounce size is right now pretty nice. It's adequate, about a 50% bounce. Need to see a little bit more to give ourselves the best chances of reverting this into a new daily uptrend, get a daily uptrend confirmation, and you finally get your weekly lows being set, and you can possibly be looking at some SOFI continuation, 16, 17, and eventually possibly $20, reacting nicely from this lower base of support, which is arguably down to $15, $14. So this is the short-term support area for SOFI. Tag the 12 EMA last week as well. I do like playing some short puts in this level, 15, 14, depending how aggressive or how conservative you are. Just allow yourself some room to eventually DCA if the markets do get volatile in January and we start undoing a lot of these growth names in the end of the month of January as people panic, earnings come out. You guys know how it works, right? Just keep some money to DCA in a SOFI. I think they'll have a good 2025, but early year might be a little bit bumpy with the rest of the markets. So leave some room to DCA. $13, $12, maximum pain, maximum sell-off fears, etc., etc., etc. You guys know how this game is played. I'm not opposed to playing it here. 15, 14. As a matter of fact, I'm in this one myself. We'll take a look at that when we review my portfolio in just a few short moments. And that is pretty much the analysis on SOFI. Looking quite good, guys. The bulls are looking good, holding the areas. It's just we do not have the daily uptrend confirmation just yet. So be patient with it. That is everything for our market rundown. Now, I know that I said to a few members in our comment section that I would review their stocks today. I will be doing it, guys, I promise, on the Wednesday session. Wednesday is, the holiday is on the Thursday, right? So because of the president, essentially, President Carter passing away, there's going to be a market holiday on the 9th. I'll cover your guys' stocks from the comment section, not new ones, but a few people such as Carol, such as our longtime viewers who have been watching for a while. They've asked me for a few requests. I used to do subscriber requests up until about a month and a half ago. I stopped doing those videos, even though they were very, very fun. They were a bit time consuming. So that being said, I will review them on Wednesday. Why? Because right now I'm going to do the portfolio review. Monday video is a little bit longer, preparing for the week, etc. Wednesday, no portfolio review. So Wednesday, I'll be looking at a bunch of different tickers and your guys' tickers as well. So apologies for that. As of right now, let's take a look at the portfolio. And as promised, guys, you know, we're showing everything now this year for the start to the year, right? My portfolio is starting at $1,000. No, I'm just kidding. This is the, how should I call it? The dumpster dive trade portfolio that I started back in August, September-ish. I put $1,000 in. All these companies were absolutely destroyed, and we figured out if we can outperform the SPY or not. So far, not too bad, but this one as well. So I withdrew most of the capital, guys. We're sitting pretty much at the end of the year. We're pretty much sitting about 93, 94K. I was telling you guys, I always run about, you know, about 100K of exposure, sometimes slightly over. Now I gave myself a more achievable metric. I withdrew it to about 48K. This was on last Wednesday, pretty much, right around the holiday. And unfortunately, well, fortunately for me, but unfortunately for the account, we're back above 50. I wanted to start it under 50 and see how much we can ramp this one, because I think 50 is an achievable amount for most people, right? Maybe if you're just starting out, you maybe only have a 2K account, a 5K account, or a 10K account. But a lot of people who are trading, either the average, I would say, is between a 20K account and maybe like a 70, 80K account. That's the average where most people are situated. So I figured I should go right in the middle point there, like 45, 50K, and tell you guys, see how much we can grow this account, right? You guys know that I posted all my performance for 2023. 2023 was a fantastic year. We made like 75% annualized. I showed you the performance yesterday in this tab right here, right? No funny stuff going on. We closed the year. I mean, with today, you can argue it's 68, but with the Friday, closed about 64%. So 2 very good back-to-back years. No complaints, and that was with much more capital than I have right now. So now I'll be running the same exposure. No positions have changed at all. Didn't really close anything since last Friday or since midpoint last week. It's just for now, I'll still be running 100K exposure, but now I'll be teaching you guys some lessons about the good use of margin, when to use margin, when to not. You guys can see I have a ton of buying power right now, and I've kept that for a reason. We have a lot of buying power because we're going into a volatile period. So I'll show you guys when is a good time to deploy margin, how much I use at any given time, so you guys get to see my account fluctuate in real time. Before, the reason I wasn't showing this is because most of the times in the last 2 years, my account was over 100K. And I feel that, you know, some people have 100K, but for a lot of people, 100K just looks like a big number. It seems somewhat unachievable. And when you see me making gains, a lot of people think, well, it's easy for you. You have 100K. You know what I mean? I know, guys, I've been there before. I know exactly how the psychology works. So I figured I should show you guys a more manageable account size, how to run some things with margin, which a lot of you people are experimenting with, of course, as well. Never overdo it. I never recommend anybody copy me or use margin, guys. It's an easy way, if you don't know what you're doing, to lose a lot of money really, really quickly if you're not if you don't have high conviction plays, or you don't have a very defined strategy that you respect to a T, right? So that being said, no new plays for today, guys. Just wanted to show you where we stand right now. No real new plays today because the markets were green. So I was just riding the gains. You can see the gains today. This is not the correct P&L. It's actually closer to 1,000. Interactive brokers sometimes on the website is a little bit weird, but we'd have about $1,000 P&L today, just over 1,000, like 1,200 bucks. Everything pretty much was up today, guys. All of our call options, I have a call option list in the whole portfolio. Everything pretty much, except for Square, which is covered, and Coca-Cola, everything was up fantastically in terms of gains. A lot of leap contracts there as well. So the positions, nothing else changed. We're still maintaining the covered calls on Amazon, on the Google leaps as well, even though they're roughly break even. I'm happy at the end of the month of January with those. We have the NVIDIA. These are the assigned shares. They will get called away this Friday, most likely. Our average cost in NVIDIA right now is down. I mean, we've lowered it from running the wheel on it so far right now. It's looking very solid. Average cost on NVIDIA, $129.69. We get called away at $137, guys. It's almost $800 in our pocket of running the wheel strategy for like 3 weeks. 800 bucks, I'll take it. Easy money, in my opinion. That being said, we also have an NVIDIA call, which is not in this portfolio, but just to show you guys that I do have it, I have the NVIDIA call, which we fired off. You can see right here, December 26, 10:30 a.m. We bought the NVIDIA calls, 121 calls for about $45. Those are up roughly $500-600 bucks right now. You know, probably a little bit more than that, maybe like 15-20%. They're up right now, so doing good. We also have Microsoft leaps, not in this portfolio, in the other portfolio too. Those are also up. We bought them a while ago. I'll show you them. We bought them a real while ago on Microsoft. Are they here? Or in the, oh, they're in the other channel. Anyways, you guys, I've shown them to you before. I have the Microsoft leaps that I got at 415 as well. Other than that, most of our leaps are covered AMDs are doing really well though. The AMD calls are doing well, right? These 140 calls, they're now back to break even from where we got them right before Jerome Powell. Other than that, guys, everything is exactly the same. The only trade that I opened today is one short put contract on TSLL, 2 times Tesla leverage, 23.7 strike, and we're going for 16 cents. This would be roughly Tesla at 370, 375. So I'm willing to take the trade there. Other than that, guys, we're just covered. Covered calls on Uber, looking to get the shares called away. Our Uber leaps, they're doing pretty well right now, right? The Uber leaps are up very decent, 20+% right now, and some of the debit spreads are working well too. So all in all, not that much to report today. Not chasing the market on a day like today. They didn't find any good wheel trade opportunities, but we have a lot of volatility this week, so I'm not going to be chasing the market. Going to be waiting patiently. And for all days where I have no wheel trade opportunities, you guys see how many longs I'm running in the portfolio right now, right? Trust me. I don't need I don't need plays instantly right away, right? If they come, perfect. If not, I'm perfectly happy to be running, to have all my long form plays up substantially today as well. So that's a recap of the portfolio. Hopefully you guys enjoyed today's video as a whole. And if you did, consider dropping a like, would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these Monday to Friday after the close. And lastly, guys, if you have any questions whatsoever, please feel free to ask me down below in the comments. Anything about strategy, anything about plays, stocks, options, whatever you want, always fair game. And in the event, guys, that you want access to all my real-time trades, whether it be the wheel trades that we do every single week, right? Oops, that's a success channel. Shouldn't show you guys people's names unless they want me to, of course. So these are all the trades since the start of the Discord. The greens are the check marks are the wins. The red little circles here are the stops or the losses. So I'm always transparent with my trades, transparent with the accounts and everything. Hopefully this is more manageable for you. If you want to join the Discord and have access to all these trades, private morning live streams Monday to Friday for about an hour or two, all the trade alerts, calls, short puts, debit spreads, credit spreads, everything, shares, and ask me all your questions throughout the day. The link is down below, guys. That's it for me. Take care. I'll see you tomorrow after the close, guys. Always a pleasure and peace.